Buyers broke to a new high last week, but the move was pretty much straight off of the lows. So, is retracement inevitable, and how much retracement is too much? My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and our strong report. In this video, we will cover that and more. So, let's get into it. Okay, so as of right now, these buyers are, of course, positioned well again, right? So the sellers were positioned really well 2 weeks ago to press the issue, right? They had very lengthy consolidation here. They rejected from the all-time high supply. They broke prior areas of demand, and it was a very clear objective, right? Their goal was to negate this breakout, right? On the higher time frames, this July 2024 breakout was the key. We broke out from over here, held a back test twice, broke out from this demand zone sitting right on top of that July 2024 high, held another back test off of it, and then it was pretty much off to the races since then. So it's a higher time frame breakout, a weekly, monthly breakout, right? Well, let me just double check here. Let's see, July 2024. Yes, so it was a monthly and a weekly breakout. So, the goal for both sides is always to try to negate the other side, right? It's like a military campaign, so if the buyers are going to advance, of course the objective for the sellers is to try to negate their advance, right? And this is just, essentially the infinity war, right? They're just kind of always battling it out. And so that's the idea. That's the primary idea, right? And so as of right now, you'll notice that the sellers did not make it down to where there was a ton of volume traded. Like this structure that's sitting on top of this July 2024 high, a bit of a proxy. If you can't trade through this structure over here from September 20th to October 8th, well, then obviously you don't get back to the July 2024 high. And if you don't get back to the July 2024 high, then obviously you don't negate this breakout. So this breakout continues to be affirmed as long as you're holding over this guy. So the fact that the sellers entered this low volume area and then couldn't touch down, they couldn't even test the high of the structure here at 570 or 471. Very notable failure in and of itself. When you take into consideration how much time they were consolidating here, this is essentially like winding a punch up, where it's like an anime when the when they're powering up for like 4 episodes or whatever, and you have to wait every single week before you can watch the next episode, and you just really want to know what's going to happen, and they just spend like a month charging up their powers and like talking about their plans to each other. You know what I mean? Anyway, so that's the idea. That's kind of what was happening here, right? The sellers were charging up their strike, and then this was a strike, and they got pretty much completely stuffed. So at this point now, buyers are looking great. Not only are buyers looking good on the SPY, like in the overall market, just from a technical perspective, but recall what we were talking about regarding the potential for bullish rotation, right? What do we want to see? We want to see our major sectors creating areas of demand, breaking out, and creating more areas of demand and breaking out. We do not want to see them creating supply, breakdown, supply, breakdown, supply, breakdown, right? Basically, we want to see when like the QQQ, if the QQQ is moving higher, then XLV and XLF, they can take a break, they can trade sideways, no problem. And then when the QQQ starts to retrace, if XLV and XLF, they break out, they create a new area of demand and break out, that's bullish rotation. So bullish rotation is pretty much right back on the table now, because you have this big old demand zone under the rather in place for XLF, and you have a not as large of a demand zone, but you do have a daily demand zone for XLV as well. So pretty much all three of our major sectors now have a lot of demand that they can look down to for support. And so again, if they just take turns establishing sideways structures and then breaking out, again, that's just bullish rotation, right? So that's looking much better. And at this point now, what we primarily care about for SPY is what happens here, right? Like all these buyers need to get done now that they have traded over the prior all-time high supply, is at least hold it, right? So the best case scenario now would be to hold over 607.55. That's the point of control of this structure here. Holding over 607.55 will affirm it as demand. And of course, if we're affirming the prior all-time high structure as demand, then these buyers are positioned really well for a go at new highs. Just like last week, what we were looking out for was, okay, well, we're pretty much smack dab under at the supply, sitting just under the all-time high supply. So what we wanted to see this week was to hold over this guy, which would keep us positioned well for a go at new highs, which is exactly what happened. And now here we are at new highs, right? So it's really just a matter of like monitoring our references, right? As long as we are monitoring our references, then we can call the market exactly for what it is. And if we can call the market exactly for what it is, then we can pick the best location for our trade ideas, right? It's just how it has to work, right? Like if you're, again, to bring it back to a military campaign, right? Like if what do you need? You need intel, right? You need to be able to call the field for what it is, right? The context, whatever, the setting, the circumstances of the, I guess, mission or whatever. You need to know exactly what things are, right? Call things exactly for what they are, not just the context of everything, but also your like strength, right? Like what are your forces looking like? You know, are they trained up well? Are they rested? Have you been rotating them off of the front line, or are they very tired? Are they beaten up? Is their morale very low, etc.? You have to call things for what they are in order for you to make the best decisions going forward, right? So that's really the key, you know, when it comes to trading technically, at least when it comes to technical sequencing, you just want to figure out a way to call things exactly for what it is. Find a way to interpret market generated information objectively, right? You don't want to put your own narrative on things, right? Like if you're a kind of operator who goes out and has a trade idea and then starts like looking through all these different indicators to see how they support your idea, that's not ideal, right? Because you know you're just looking for confirmation bias essentially. So anyway, that's the idea. We want to call things exactly for what they are, and then because we can call things exactly for what they are, then we can decide where the ideal location is relative to risk and reward, obviously. Okay, so that's pretty much it. At this point now, you know, there's so much space for a daily higher low. The best case scenario would be to hold over 607.55. The next best case scenario would be to hold over 602.13. That's the low of the structure, because as long as price is hanging out in this structure, the buyers are chipping away at the supply here. Okay, so that being said, again, lots of space for a higher low over 575.35. So for a pullback entry, you can see where the volume really picks back up is off of this guy. So this is where the sellers picked up, right? This is where the buyers failed to defend. If the buyers were going to stay strong on this reaction, on this move down, they would have held the back test here and then continued on. So the buyers now are positioned well to essentially pick up where they left off if they can just hold over this guy, right? Because again, this was the failure. Had these buyers just done this, right? Had they just done this, and then this FOMC reaction doesn't trade through this guy, well, then obviously what happens? We get price action like this, and then we're staying pretty much just knocking at all-time highs. So that's not what occurred back here, but that is the potential of that occurring now is pretty decent, right? We've got a big old bounce here. This is honestly a huge show of strength, right? When you see this like 7 gap ups, right? And you know, when the market starts to do that from a profile perspective, it looks like elongation. Like if you look at it on like a single session, if you were to consider this entire leg as like one session, it would look like a very lengthy, very thin kind of a session. Again, that's just a lot of strength, right? So you know, we shall see what the retracement looks like. Retracement is certainly inevitable. I would not be surprised if we see some meaningful retracement next week. And how much retracement would be too much? I would say if we lose this structure as support, so if we were to come back down under this guy and find acceptance under 594.37, that would probably be too much, right? Because then we're pretty much back to expecting this kind of price action if we lose 594.37. Even 598.16 is a bit of a red flag. We want to make sure that we can continue to affirm this guy as demand. Affirming this guy as demand keeps us knocking on all-time highs. Affirming this guy as demand, of course, has us pressing to all-time highs. Okay, so that's what I'm looking at it with SPY. And so you put that all together, what's a pretty reasonable place to be looking for trades? Something like this, right? We don't want to come too deep. A little break with no follow through, that's fine. But you know, no more than that. And what we're playing for is just the R1 for the year, right? So here's the R1. It's just my preference. Like I just like to keep things really, really simple. When we're dealing with blue sky breakout, you know, what can you do? You can only really use projection tools, right? External retracement, Fibonacci extensions, like GAN fans, whatever, time to mark sequential, like if you print a TD res or something. That's really all we have right now, right? So I like just sticking with pivot points. It's very straightforward. The R1 for the year is all the way up here. And so if you were to hold this area here, the supply that was sitting just under the prior all-time high supply, then you're staying positioned really well to have a go at the R1. That's the way that I see it, at least. And that is pretty much it for the SPY. Okay, so moving on to the Qs here. So for the QQQ, hang on a second here. Okay, right. All right, so for the Qs here, it's similar, same but different. So this is really the key supply that I care about, right? You can see how much volume was traded here at 521.74, roughly the point of control of this guy over here. So next week, how much retracement is too much for the Qs? If we get back under 519.16, that would be a bit of a red flag. Remember, this is the structure that we really care about. For the same logic as the SPY, this was the last area of demand that the buyers could not hold over, create a new area of demand, and then break out. So again, the buyers, what do they want to get done here? They wanted to see something like this, hold the backtest of this guy, continue trading sideways, and then break out. That's obviously not what they got done, but they have the opportunity to hook up where they left off if they can hold over this structure. So daily retracement is actually already underway, with anything over 499.70 being good for a daily high or low. And that's really it. Again, would not be surprised to see some further retracement. This is not real. This only came down to like the 519.16 level, so this is an error that they have yet to fix. And that's really it. And so this is very notable. For 2 sessions in a row now, the sellers worked on filling the gap and just didn't really get much done. If these sellers continue to fail to fill this gap next week, that's pretty much the best case scenario, right? Because again, a gap is always indicative of change. So what are we looking out for then? Next week, retracement plays, something like this, just playing to get back to the all-time high. So there's a little relative weakness in the Qs because they haven't gotten back to the record high. So we'll just play for something like this. If you're looking for a pullback entry, playing off this high volume area, to get back under this guy, I think would be a bit of a red flag. And so something like this, I think, is very reasonable for trades next week in the Qs. All right, so for IWM, just balancing, right? So for IWM, very notable. Remember, we were watching this guy as a reference. Picture perfect rejection from the high of the structure. Pop and drop, slight break, pop and drop, rather drop and pop off of the lows of the structure. And now we've pretty much set a daily higher low and higher high, but the higher high didn't really see that much follow through. So what do we care about next week? We primarily care about 227.17. We still care about 227.17. Remember, this was the level that we made this play off of. I believe there was a play over here as well. Nope, that was a good one too. But we had a play set up over here, did a session set up over here. And so the goal for these buyers next week is to just hold over 227.17. That's pretty much the best case scenario. If you come back down into this range, bit of a red flag because we kind of just held this back test over here, but it would still be okay as long as they're affirming this guy as demand, which is the case as long as you're holding over 221.09. But in order to move value higher relative to this structure, we need to hold over 223.69. So how much retracement is too much for IWM is definitely under 221.09. That would be problematic. That's pretty much it. I think this is a very notable failure, right? So I have this ray drawn at 230.55 just to show you where the overlap begins. So if we were to zoom into the hourly time frame, you would see that on that December reaction, there's a little bit of sideways trade over here. This is the key supply that's in the way right now. These buyers have not been able to make their way back up there. Very, very notable failure here. But at the same time, again, as long as you're holding over 227.17, no big deal. So I don't really care to do a trade zone for IWM. This is just not enough follow through for me to be interested in playing in here. Because if we were to set up a trade zone in here, like something like this, right, coming all the way back down into the middle of this range would pretty much increase the potential for us to just keep trading sideways, right? This could very easily just be a pop and drop over this high, and then we just continue to channel prime trade sideways. So I'm not going to do that for the rut. And I think if we were to have traded higher here, crack through this two-way trade here, then look for a backtest play, I'd be a lot more comfortable with that. So if next week that shakes out, then we can look to that for next week. Okay, that's pretty much it. And so moving on to the Dow here. So for the Dow, again, very, very notable move. This trade zone of old shaken out fine and dandy here. So if you recycle this zone, you should be out, out of most of this position now. You can leave your stop under here, and what you want to do, what you want to see now is just some sideways trade like this, and then break out before walking that stop up. Don't choke this trade because, like if let's say you walked it up to here, which is a pretty reasonable walk from like a technical perspective, you're thinking, all right, well, as long as we're holding over 433.67, affirms this structure as demand, no problem. That's true, but it's not about holding it, right? It's about acceptance, right? Or rather, it's not about breaking it, it's about acceptance. So you can get a situation like this, and this honestly took me like way longer than I'd like to admit to realize this. Like I was stopped out of so many trades just kind of choking it with stops that were too tight for so long. It's honestly, I feel dumb for for having not made this adjustment so long. But and this has been a big game changer for me. So basically, I don't touch that stop yet until we create a new area of demand, because this can happen. You can trade under this guy but not find acceptance here, right? And then trade sideways for a bit, and then you break out of this guy, so it shakes you out, and then it makes a new way. If that's happened to you, I can almost guarantee you it does, or it has. Then this kind of an adjustment was for me was huge. So I wait for this new structure to get created and then a breakout before walking it up. Because if we've already initiated down here and you've taken partials out along the way, who cares if your remaining position gets stopped out? You've already been paid for the attempt. You can collect those gains and then apply them to the next attempt, right? Just reset here and look for another setup, right? Anyway, so that's pretty much it for the Dow for next week. I think it's pretty reasonable to be looking for pullback entries like this, right? So something like this, something along these lines, and just looking to get back to this supply. Like, I know that you're practically there already. The buyers are practically there already. But if they fail to get here and then they pull back, they should be looking to get here. The sellers should be looking to get back to the breakout point. And if they can hold over the breakout point or prevent acceptance under the breakout point, the buyers, I mean, then they are going to stay positioned well for a go at new highs. Something like this, I think, for next week is pretty reasonable. I don't want to come down so deep. Something like that. Very reasonable for the Dow, in my opinion. Moving on to the dollar. So the dollar dipped into our trade zone, got to the target, dipped into our trade zone, came just shy of hitting the target on this pretty wild bounce. And now we've lower high and lower low into another back test of this guy. So remember, we care primarily about this guy, right? This guy over here is what contained price for many years. And so the back test of it is super, super key. If you're still in from here, right? If you're in from this trade zone back in September, then your stop can either you stopped out already if you walked it up here and you saw this breakout, or if you still have it under here, I think that's fine. Don't touch that. And just wait for some sideways trade and a breakout before walking it up again. At this point now, I still think this is a reasonable trade zone. Like, obviously it doesn't look great right now. We're pretty much at the middle of it. But if they can hold over this area of demand, if they can hold over this guy, then these buyers are doing just fine bigger picture, right? Because again, holding over this guy means all of this is still being affirmed as demand. Okay, so that's pretty much it. And even if it stops out, who cares, right? It's part of the game. And if you trading along with this guy, like, you can take a lot of L's like this if you took the buy down here. So that is not that you want to or anything, but anyway, that's pretty much it. So daily lower highs and lower lows. Lower high resistance at 108.360 and 106.335 is going to be super, super key. That's just the point of control of this guy over here. And that's really it. If you have no position on right now, you didn't use this back here, because remember, this trade zone is from over here. I don't hate this, right? Like, for a new setup into the next week, something like this. Let me hide this for now. And we'll just use this entire zone, something like this. And then we're playing to get back to these local highs, something like that. I think it's pretty reasonable if you have no position at all for the dollar. Okay, moving on to NVDA. NVDA dipped into our trade zone, got to the target already. Honestly, it just looks like more responsive trade. So I think it's pretty reasonable to continue to be looking for plays like this. It's pretty much the best case scenario for now for these buyers. Technically, the best case would be to hold over 140.76, but obviously that's been problematic for these buyers. So the next best case scenario would then be to just hold over this big chunk of volume here. Let me just give a second to load here. It's actually all pretty much flattened out because we spent so much time here, but in prior weeks this was less so. I still think this is fine, right? Like, again, it's a very clear sideways structure here. So whenever you're dealing with a sideways structure, you just want to be mindful of, okay, well, what is creating the sideways structure, right? Just like in the dollar just now, like why did we care about here? Because we knew that this was the key area of demand, right? The market already let us know that this is what the market cares about for buyers, and the market let us know that this is what the market cares about for sellers, this area over here. So when you see this two-way trade, it's really just a matter of figuring out what are the two structures that is being problematic for the market, right? What's the key demand, what's the key supply, and then taking responsive trade around those zones. So that's pretty much it for NVDA, right? I still think this is a very reasonable trade zone to be looking for responsive trade. bottom fishing off of the lows of this local range, just using these structures, the structure that we've talked about already many times in the past as our references. I really wouldn't make an adjustment to this because I would not be surprised if we were to rotate like, a little bit deeper here. Obviously, I know we've already affirmed this guy here, affirmed it over here, affirmed it over here. But still, I would not be surprised with a lower low. So I wouldn't touch this personally. And I would still much rather prefer it down here. Like I'm still not convinced that we can't come all the way back down here. It looks very similar to Microsoft when Microsoft did this, right? So Microsoft was a leader, I believe, in the rally, and then he had a higher high, not see follow through, come back down, and they've just kind of been chopping around ever since then. I would not be surprised if NVDA is doing something similar. It doesn't, I don't know. I'm not predicting that, but I wouldn't be surprised, right? As long as these Fangman team names are just kind of taking turns, breaking out, consolidating over long periods of time, then QQ is probably going to be fine. So I would not be surprised if we're looking at something like that. So that's it for NVDA. I would just keep rocking the same trade zone, hourly oversold conditions into this zone, and or I'm looking for pass back overplays using this guys as your reference. So hourly oversold conditions into a key level of this structure over here, which would either be the high at 131.26, the value area high at 129.19, or the point of control at 128.53. You're basically looking for hourly oversold conditions into this key levels, looking for the pass back over. You buy that pass back over, stop is under the local low, and try to get to the other side. That's pretty much the only way that I would run NVDA right now. Okay, so Bitcoin, this honestly is looking pretty solid here, right? We could continue to hold over this key daily demand zone, and so it dipped into our trade zone over here. It's already gotten to our target, and so if you use this guy, I would pull these bids lower, throw your stop under this local low, and then obviously if you've taken partials out, if you get stopped out of that last piece, again, you're still walking away with profit, and that's, in my book, that is a-okay. So that's it. I do want to show you guys Bitcoin on another chart with the developing value area high, developing point of control. So I think this is very notable. This is the last period of very lengthy consolidation, and you can see how before this big old breakout, what ended up happening was you have to start holding over the developing point of control of the local structure. So this developing point of control moving up and down, it was relative to all of this. And now here's the Deepak right here. You can see that if we zoom into the hourly time frame, you had a couple holds over here, a drop and pop over here, and then look what's happening right now. The value area high, the developing value area high of this local range is continuing to support price. That's even better than if the developing point of control is supporting price. So as of right now, these Bitcoin buyers are still looking pretty solid, despite the fact that these higher highs not really seeing that much follow through. Now, that being said, would I change the trade zone? I personally would not. Again, I'm a pretty conservative guy. This is all still sideways trade, and the market has already told us this is the key structure to be playing off of. Like, if it works, if it doesn't work again, who knows? If we never get a chance in there, so be it. But that is still where I think the most reasonable area for trade is for Bitcoin. So that's pretty much it. Moving on to Ethereum. So Ethereum got pretty close here. I still think it's a pretty good chance that the sellers will take us back down to this area to come into this trade zone that we've been waiting on for a very, very long time. And the reason why I say that is because as of right now, you're just not finding acceptance over 3501. So this is the key local overhead supply. We've come back down under it, pop and drop, pop and drop, pop and drop, pop and drop. So obviously there's still supply, right? So if that's going to be the case and we're just trading sideways, there's no reason why we couldn't see another leg down. And if we do see another leg down, again, this is so much demand here that I personally think it's a very reasonable area to be looking for trade. Now, if we get one of those, classic crypto dumps and it just drills right through it, for me personally, I don't really very much like scaling into weakness. I prefer trying to stick to being on the right side of the V. So I like those pass back overplays. So if anything, if you're like me, and you're worried about that kind of a situation, I would be primarily focused on 2570.27. If we drill back down under here, don't see follow through, pop back over it, buy that pass over, stop on the local low, chop it up at 284.12. Or, it's fine if you want to just use this as a trade zone. I just suggest that you wait for there to be some kind of major extension first. I think there was a pretty similar situation, right, with Bitcoin. Doing something along those, like pretty much this, right? Like you're just looking for a pop and drop situation right at the POC. Okay, of the key structure, I mean. So that's really it for Ethereum, I think. Yeah, that's really it. And then finally for CCJ, so CCJ I believe was a bust, so it took us out of this one over here. And kind of a bummer, right? Because I was like, I don't know if I would use this again, and it does shake out again. Still, it is what it is. You're not gonna be able to capture them all, and I don't really think this is a terrible idea next week. Like, I know this is technically already a bust, but if you get a session to session setup next week, which is pretty much just gonna be the opposite of the show and tell example that I have coming right after this. Basically, you want to see an open. If you're a seller, you want to see an open now on Monday, a week open under this point of control, such that if you see a situation like this where, hold on, we don't need this, so such that, hang on, we don't need this either. Oops. So next week, what's happened over here on the daily time frame is this is still a pop and drop at this key supply here. So I think it's the all-time high supply. It is the all-time high supply. So if these sellers are going to press the issue next week, then they should not allow acceptance over 55.75. So if you get a situation next week where you open up like here and pop over the point of control, or even fail to get to the point of control, roll over, you can look to sell that pass back under, or sell the open and then look to target this guy over here, the value area high at 52.69, because if you fail here, they're going to try to come back down here again, just like what just happened. They failed to advance over here, you trade back down here, and you find support over here. So I don't hate that as a session-to-session setup next week. And if the session-to-session, if what I just described means means nothing to you, it sounds like nonsense to you, just sit tight, because the example that I have for show and tell this week is a recent strong report pick. Oh, I'm sorry. Wait, I got a question. It comes up a lot from Paul, and he's used to be a member of our community. Now he's out doing his own thing. I hope you're doing well, Paul. And he hit me up on Twitter and asked, hey, listen, why, he was looking at CCJ and he was wondering, okay, listen, why didn't I update this structure here? Like, why didn't I mark up this guy? You know, is he missing something? And no, right? Like, it's just a choice that I made, right? Because what do I care primarily about? I care primarily about the all-time high supply, right? That's the key structure for me. So does it mean that it is wrong to mark up a structure over here and use it as a reference? No, just consider what the implications are, right? I personally don't think there's any right or wrong, right? Like, when you know, like, even something that people will almost universally agree is wrong, like if you ask them, hey, listen, is murder wrong? Most people are going to say yeah, right? And most of the time I would say so as well. But at the same time, there is nuance to everything, right? And sometimes murder is maybe not necessarily right, but it is appropriate, right? Like, if someone's trying to kill you and you kill them in self-defense, well, I mean, right? And I mean, think about soldiers, right? Their job is murder, right? Like, a soldier's job is murder, and you don't, you don't consider what they do wrong per se, right? Like, it's kind of a necessary evil, at least at least given the state of human overall consciousness right now, right? Probably because, I think once we solve energy, maybe we can solve war, right? Like, if we had enough energy to sustain everybody and we can raise the floor such that everybody has a decent standard of living, then I mean, we'll still probably find reasons to hurt each other, but I think we have a decent shot at solving, war if we can solve energy. But until then, unfortunately, killing is just kind of part of being part of nature, right? Like, that's just how it goes. So anyway, yeah, so there's no real right or wrong, right? It's just a matter of what are the implications of it, right? And so what are you doing here? If you're going to mark up this structure, right, then you're more of a momentum style trader, right? You care more about what just happened, right? But if you're still playing over here, you're probably a longer term time frame operator, right? And you care more so about the change that this structure represents. The change from this structure represents new highs, right? If you trade over this guy, that's new record highs. That's a very notable change, right? If you're trading over this guy, it's not new record highs yet. It's just that this trend of sideways and down is continuing, right? So the implication then is, if you're playing over here, you're willing to take a shot at joining sellers in the middle of the move, right? So you can kind of always think about things in general as you have the innovators, they're the ones who actually start the move. Then you have the early adopters, then you have the late adopters, then you have the laggards, right? And so the innovators started the selling over here. If you're going to start selling over here, you're potentially an early adopter at best, right? You might also be just too late to the party, right? So it's not right or wrong to have marked up this guy and used it as a selling reference. Just again, consider what the implications are for that, right? Like it's not, it's different. This structure and this structure, they represent different, I guess, different levels of change. Okay. So anyway, that's my answer, and I hope you're doing well, Paul. Okay, so for show and tell, this week I have VRT was the pretty recent idea, and it was actually, the idea I think was actually back here in January 5th was the original idea, and I was just looking for a pullback play, and it actually didn't come into our official trade zone. But last week, for the private updates, I was saying this is one that I'm very interested, or it was 2 weeks ago. I said this was one that I'm very interested in, and I'll include the clip for the private update that I sent out to our subscribers, letting them know that this was very interesting setup. So it was actually on this day when I was saying that, or rather after this day is when I was saying that, because it was looking like these sellers were failing to come back down to 121, which would be a very notable failure for them to not even be able to backtest this local area of demand. And there was like a lot of, 3 wicks of buying, right? Like there were these, wicks here, right? So it looked like these buyers were starting to find demand before they even caught down here. So I was thinking, okay, and here's the session to session setup, where if it was nonsensical to you just now over the CCJ, this is the setup, right? So I was thinking, and again, this is in the setup video, I was thinking, okay, well, if I see something like this, and then we get a strong open the next day, right? So if this day was opened up over here instead of down here, we have ourselves what I call a session to session setup, right? Because if we're going to be over here on this day, right? So it's at the end of this session here. So this day over here is this day over here, right? Wait, I'm sorry, January 10th. This session over here, right, is this day. And so if this occurred up here, right? So if we got an open over here, pretty much the opposite of what I was talking about with CCJ over here, and then don't find acceptance under this point of control, and then move back over the open, we can buy that move back over the open, throw our stop under the local low, and assume that these buyers are trying to set that daily higher low and should be targeting the supply that they just rejected from. So that was, in a nutshell, the thesis. And it obviously didn't shake out on Monday because we got a weak open. But then on Tuesday, that gave us the context that we're looking for, where you had a strong open. So you test the key level on the daily time frame. The buyers came down, tested this key area of demand, and then they closed pretty much near the high of the day. And so if they're going to build on that, what do they have to do? They have to not allow acceptance back under this guy. So it was a very straightforward setup. Here's the alerts for it. They're all timestamped as usual. Hundreds of people have received these emails, so very easy to check the work. And I said, all right, so I grabbed the starter. We'll add, if tested yesterday, that was a 9:32 at January 14th. I must be missing a message because I also sent out an alert saying I'd be interested in this. And so it was a January 14th, grab the starter. We'll add if tested yesterday's point of control. And then soon after, I chopped it up at 9:48. So at 9:48, we are testing over here. So we buy the open. Our stop is under the low, and we are looking to chop it up here, right? Why here? Because we have 2 point of controls that are stacked up pretty much right next to each other. So if these buyers are going to have any problems at all, it should be somewhere over there, right? And so if you'll notice, if we just zoom into that session, that's pretty much exactly where they turn. They turn right under where those 2 point of controls are stacked. And then it sure looked like we might get stopped out of that situation, but we didn't. And then the next alert goes out 2 days later, where I say, hey, listen, I'm using an OCO order to look for another exit with a stop under the prior day's point of control with some wiggle room. And I'm targeting the value area high for the January 6th session. So the January 6th session is over here, this guy over here. So on the daily chart, I'm looking at it as this guy over here. And I'm thinking, okay, well, I'm looking at this as the all-time high supply. I know that if these buyers are going to continue to press the advance from here, they should be trying to get here. But if they're going to have problems getting up there, it'll probably be off of the sessions over here that created problems, rather of the sessions over here where they just failed, right? So if these buyers are going to fail and set a lower high, then it should be off of these references over here. So January 16th is this day, the 16th, yes. So I was just saying, hey, listen, I'm going to look for another exit there, and then the stop loss, let's see, the stop loss was just under the prior day's point of control. So I just had a little bit of wiggle room under here, looking for another exit over here. Obviously we did get that exit, and these buyers did get to, not only did they get to this all-time high supply, but essentially they've already traded through it. So this chart is looking pretty great. And then one more exit on the 22nd. So that was to put the order in. Obviously it didn't trigger yet until later in 11 a.m. So obviously once we got triggered out, we are really honestly sitting pretty already. And I made the decision to take off even more of the position on the 22nd on this big old gap up, because, you know, that's very, very strong move. And so I would not be surprised by some further retracement. And my stop right now at that point was under here. So by reducing my size again, I could get my stop loss to under this low, which is really where I want it. So the sizing is smaller, but now I can have my stop very comfortably here. And even if we come back down and take the rest out, it's still a very profitable trade overall. And so that's my thinking. Again, I don't want to choke this trade. So if anything, what I want to see now is just some sideways trade here and then a breakout, and then I'll be more happy to walk that stop up. So that's pretty much it in a nutshell, review of one of the more recent swing report trades. And again, the swing report is just a weekly update for any private ideas. Dan gives an update as well. If you're a member in our regular Slack and you're seeing Dan do his swing trades or whatnot, then the weekly videos in the swing report kind of give you context for what he's looking out for in the week ahead. So probably makes it easier. I imagine it makes it easier to follow along in the chat room. Otherwise, it's also 2 novel ideas every single week that I will send out, and any trade that I take, I will send out alerts just like this, just to show you the logic of each of these actions. And again, I will include a clip of the what I shared to our subscribers to have you prepared, to let you know, hey, listen, I'm looking for this setup next week. So it's not like I'm just coming out of the blue, you know, saying, hey, listen, we're doing this trade now here. I try to give as much lead-in time as possible. So that is it. That's it. So if you've made it this far, thanks. I appreciate you sharing some of your time and energy with me. And if you wouldn't mind hitting us with a like and subscribe, that would help us out a lot. It's free to you, costs you nothing, helps us out a bunch, and lets us know to keep making content like this. So that is really it. Oh, that's right. And if you're interested in joining a group of full-time traders, give the Chart Guys a shot. Community, link is in the description below. I cannot speak today. And that is really it. So I hope to see you all next time. Farewell. So VRT is the other setup that I rather like for a session-to-session setup next week if we get a strong open, essentially trying to set this daily higher low here. So if you recall, assuming you watched the market update, you know, what are we always trying to get done, right? We're always trying to either make plays off of prior areas of demand, or if we take out those areas of demand but then regain them, those plays are right back on the table again. So that's essentially what we're trying to get done here. Essentially, this failure to come back to this high, 121, right? So these sellers were unable to get back to test the local area of demand they just broke out of. This breakout would be affirmed, this higher low would be established as well if on Monday we get a nice strong open over the point of control, so of the Friday session. So that's primarily what I'm interested in. Again, it would be like, you know, if we open up here over the POC, come back down. If it's a gap up that is incomplete gap and then we get back over the open, I'll just buy that open, throw our stop under the low of the move. Or alternatively, if we get something like this, right, come down here, test the POC, no acceptance, move back over, we'll buy that, throw our stop under here, and then see if these buyers can get all the way back up to 135.75-ish to test this all-time high supply. So that's really, those 2 trades are really what I care the most about heading into next week. Okay, so for